afternoon. My name is Kent Scornia, President and CEO of Krilogy. I'm here with my partner, John MacArthur, our Chief Investment Officer here at Krilogy, and this is your February market perspective, where we talk about the economy, we talk about the markets, and we'll eventually drill down to the portfolio conversation. John, great to be with you. Let's hop right into it. Economy seems resilient. What are you seeing from your desk?
It does. In prior conversations, we've talked about the Fed winning the battle on inflation, but the war's not quite yet over. And we're seeing that of late. We're seeing the bond market, inflation break-evens suggest that this, in fact, could be a longer slug with respect to the inflationary fight. We've seen it in the data in the last month or so. Another big inflation print next week. We think that'll be important for markets. And, ultimately, if this higher for longer interest rate narrative plays out and economic strength and conditions as well as inflation are strong enough and the Fed is on hold for longer, it really puts into question how long and if this economy can hold up without an eventual recessionary outcome, and that remains to be seen. I think from a positive lens, we've seen a pretty nice uptick in productivity. It's companies doing more with less. Doesn't even really get into the impact of the whole AI conversation that's happening. We've seen a lot of infrastructure build with AI. We frankly think it's a multi-year story in terms of how it's implemented at the, your traditional old school economy type of business in terms of adoption. That said, productivity is really helping things.
And beyond just being the Chief Investment Officer here at Krilogy, you also have the opportunity to sit down with clients on an individual basis, as do I, not just running the organization, but also sitting down with our clients. And those could be entrepreneurs, business owners, executive running companies, or also just families as they're working through their wealth management plan. The thing I see often, though, particularly in this environment, is you'll see things such as higher interest rates, inflation really making an impact on the daily budget. It's also pinching people in terms of, how do they make their financial decisions? If you're an executive at a company, how do you make the decision on CapEx spending? Where do you invest your money? You might have had a record year in terms of revenue last year, but you also might have had the most expensive year in terms of your costs and the input. So how are they navigating that moment today? It gets to be really challenging, but they're sort of working their way through that. AI is something out there. What an executive said to me the other day, that he feels like he's sitting on a horse and buggy, and the AI sort of theory is the Corvette sitting outside. He's wondering, how does he get inside the Corvette, and how does he get that thing to run fast and make things easier for him? So it's a very interesting time in terms of the economy. Let's move to the markets. Markets are really racing at an all-time high. It makes me feel as if there's that key word is out there, is what's the risk in the market today?
Mm-hmm. Markets have absolutely had tremendous momentum. I definitely would not say markets are priced for perfection, but there is a lot has to go right to not only justify current levels, but also meaningful future gains at this point in time. If we look at the Magnificent Seven top technology companies compared to the rest of the market, the other 493 companies in the S&P 500, the market has done an incredible job, as it historically does, as being a really accurate future discounting mechanism. Year over year, sales growth, for example, for the Magnificent Seven, about 15% compared to about 2% for the rest of the other 493 companies. And similarly, from a profit margin perspective, there's a pretty large separation. It's called 750 basis points to the upside on the Mag 7 and a negative 100 basis points in terms of net profit margin over the last 12 months. So we think on a go forward, that bar for large cap tech has been set quite high. A lot of that is priced in our opinion, and we're seeing this drift in rotation into other segments of the economy and markets to play catch up. And, I think there are early signs of that happening. If we look at stock price on a year-to-date basis from Apple, Google, to name Tesla. A couple, not to mention Tesla, they're all negative year-to-date, some more than others, but we think that's unfolding.
And it goes back to that risk question, right? And do you want to continue to overweight your portfolio in the Magnificent Seven, or do you look at opportunities inside the other 493 companies? That's That's sort of the risk-reward ratio that we tend to look at, right?
It is. Valuation is going to matter over time. And yes, the Mag 7 large cap tech have strong balance sheets, great cash flow, profitability. But we're also into the much more expensive range from a historical lens. And so looking outside of that particular sector on a sustainable go forward, we think is very prudent.
And your last take here, really, and talk about your team, with Jamie Setley and Jake Thornton, sort of working on, Dan Laird's working on taking advantage of runs in the market, but also taking advantage of opportunities in the market as well.
Yeah, absolutely. There's models that we run that are certainly more tactical in nature to participate in momentum, because as we know from history, momentum can really go much further and longer than many expect. And so there are segments of portfolios that we can be more tactical from a risk management perspective, both on the buy side and the sell side, and we think that's really important.
Thanks for that insight, John. John mentioned prudence and risk management. I mentioned risk here at the beginning of the conversation today. If you're a client out there wondering how your portfolio is going to interact in this market, how it's going to interact with the economy, inside this economy, I think it's really important for you to understand how much risk is inside your portfolio. We have a saying here at Krilogy: if we can understand the risk inside a portfolio, we can almost tell you what the return is going to be, whether the market's going up or actually going down. So if you're worried about your portfolio, if you wonder how your portfolio is going to interact with the market or economy like this, contact your Krilogy Wealth Advisor. We'd love to help and sit down with you and understand exactly what's happening in your portfolio and how it relates to your personal wealth plan. That is what we are inspired to do and excited to do it. For John MacArthur, I'm Ken Scarney. We appreciate your time. Have a wonderful day.